Shell, Europe's largest energy producer, is breaking into shale gas with the purchase of assets from U.S. energy company East Resources. We partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Vincent Boland joining us now live from London. Vincent, always glad to speak with you. What is shale? Why are these assets so attractive?
Well, shale is sort of the new offshore, if you like, in the oil and gas industry. It's a type of rock that has a lot of gas in it, and it so happens that the United States and Canada have enormous supplies of this type of rock, and Shell is buying a big chunk of that today.
And Vincent, I mean, what is the appeal of East Resources in particular?
East Resources is one of those companies that owns a big slice of this particular type of rock and the land in which it's found. And Shell is paying $4.7 billion to buy East Resources and a big field or shelf near the Appalachian Mountains. That's where that's where East Resources is concentrated, and that's what Shell is buying.
So, Vincent, I mean, do you think this kind of agreement is going to be symbolic, or it just represents what we're going to see more and more in the oil industry?
I think very much, especially in the gas sector. There are predictions that more and more American gas production is going to come from shale, which is the type of rock that's involved. I think you're going to see the big oil and gas companies buying more and more of this type of product, this type of resource in the next few years. After all, there's such pressure now on offshore oil drilling because of the BP accident down in the Gulf of Mexico, and I think oil companies and gas companies will want to find the best type of resources, and I think this type of asset is one of those.
And Vincent, quick question here. Of course, we've been following and monitoring violent swings in the currency markets. Is this going to affect any of the potential tie-ups?
Well, not at the moment, although the dollar-euro rate is clearly very important. It's a very important thing for oil and gas companies to manage, and for companies that do a lot of trading globally anyway. I think at the moment probably it's not having that big an impact, and the currency of the oil and gas business is dollars. So I think that right now, with the dollar reasonably firm, probably companies are okay, but it may very well become an issue if the euro continues to decline, and if the decline even spreads to the dollar at any time.
Vincent, we thank you as always. Vincent Boland joining us there from the FT in London.